Hey everybody, it is Grateful Futures here. It's a beautiful Sunday morning. The markets are currently closed. So, considering the state that the market has been in lately, we have just been ripping down out of the sky. I think it's appropriate to do a video for you guys on the market cycles in how it relates to volume profile, how you can identify a trend, assess the trend's health, see if a potential bear market is starting, and then what to look for to kind of confirm that, and how to actually trade in a bear market. So what I am going to go ahead and do is just first go over what I'm looking for in a trend in terms of volume profile, and I want to start with the typical state that the market's in, so a bull market. And before I do that, I'm just going to do a little bit of review here. Let's go ahead and take this off, and I can just go ahead and draw on the actual chart here. So, right, what is the definition of a trend? So, a trend in terms of volume profile is generally where in a bullish trend, price is searching higher, has some kind of consolidation, then moves higher. And then obviously it doesn't just go up forever. We have pullbacks. So eventually buyers run out here. They're kind of concerned with the higher prices. So price pulls back because of lack of buyers. And then price returns to an area that was previously heavy liquid. And then from there, buyers return to the market and discover price higher. And so forth. The cycle continues. Consolidation moves up higher, price returns to a heavy consolidation zone, discovers higher. So, right, what does this look like in terms of volume profile? So we have a kind of a low volume area where we have price moving quickly. And then in this consolidation means both buyers and sellers are participating in the market. We start to have higher volume because buyers and sellers are conducting business, and the price is staying in that range for longer. So we have a heavy peak here, price goes and kind of goes back to its just quick moving up, which means lower volume, only buyers are participating. And then in each one of these consolidation areas, we have higher volume areas. So that's pretty much how this would look on a volume profile. And what you really want to see is, right, this means buyers and sellers are participating in this consolidation area right here. And when price moves up and away from it, and then comes back down to it and uses that as a support, right, this would be what we would call a point of control. So a heavy volume area where it is the most contested price between buyers and sellers. When price discovers higher, and then returns to that area that was previously kind of the most contested between both buyers and sellers, and now it is a support. That is the best evidence that you have in the market that price is going to continue this trend in the direction that it previously tested. Moving up, tests it, moves higher. So that is the basis of what I want to kind of show you guys. Let's go and actually look at the market. Oops, sorry about that. Let's go and look at the market from back when it was in a bull market. And let's see if we can kind of identify some of these trends here. So just going to, if this is a good example right here, I feel like let's go ahead and just do a market replay back here. Let's go ahead and, where do I want to do it? Let's say maybe right here, I'm guessing, right? Let's do about right here. So ignore this volume profile over here. We will get to it in a second. But what I want to show you guys is that in this case, the market is trending pretty good, right? We're making higher lows. We're moving up in the market. Let's go ahead and take a volume profile of what this actually looks like. This is a fixed range volume profile. So we have, in this case, where is our heaviest consolidation area? It's this point of control right here, this line that's sticking out, along with this kind of peak right here in the middle. That's where in this section of uptrend, that's where buyers and sellers are most heavily contested. And then what is our discovery area, right? So this was our area of consolidation. Price moves up, starts to kind of conduct some business at a price higher. I call that the discovery price zone. And then what exactly happens, right? We do get a sell-off. The market does not go up forever, and we have price falling back. Where does it fall back to? To this general area of heavier liquidity, where buyers then step in and push the price up. So that's kind of that how that would look in real time. Now let's see kind of what happens here. So we return to this discovery price zone right here. And you can even see this on shorter time scales too. Let's look at just this uptrend right here. So for this new uptrend, we have price discovering higher. It kind of comes back down and consolidates, discovers higher. And where does it pull back to? That previous zone of heavy liquidity, about right here. This one's kind of a double distribution, but it kind of comes back and touches where it was consolidating before and moves up. Let's go ahead and just continue this market replay to see if we can identify some more things that I'm generally looking at when assessing a trend overall in the market. So we have price discovering higher. And now, from when this was our previous discovery area, let's go ahead and pull back. We have new highs. So that means we also have a new discovery area up here. So in this case, this is our new discovery area. This is our next zone down of heavy liquidity. But overall, the heaviest liquidity in this specific trend is still right here. That's still our point of control. So what can happen is price when we kind of figure out it's going to pull back, we'll pull back either to here, and then it can support it, but if it does get broken, whereas the next place that it's going to fall is going to be that previous point of control. So let's see what actually happens. And before I do that, let's see if we can kind of identify if price is ready to fall. And what we do is kind of the same exact theology, right? Except we use it a little bit differently. So let's go ahead and erase these. So this kind of idea of a market top, temporary market top, is price consolidating here, right? Instead of it breaking up and then coming down and retesting it, we have price consolidating and then breaking down. So it's now discovering down and then coming and retesting that consolidation zone. So that would be our point of control. And then we have, instead of a discovery higher, a discovery down, a lower, retested that point of control, and then we'll move down to our next liquidity zone below. So can we see anything like that in this picture right here for this consolidation? Well, what I always do is I take a little fixed range volume profile of it. We have price kind of, it's not that, it's not that uh, exaggerated here, but there is a little bit of discovery lower. We do get trading below this point of control of this consolidation zone. You can see some wicks starting to form there. And now we see price starting to move down out of that, right? So we had a rejection of this consolidation area's point of control, pulling back. This is when this pullback is confirmed. And where is it going to pull back to? Likely, right? Somewhere around here first. That is the first area that this is going to pull back to, likely. Let's see what actually happens. So we have price coming down to there. Some buyers come in, but immediately breaks down through that. Do they hold? They do hold this consolidation area. So we have price coming down here, buyers are coming in at this general area, and then we make a higher low and price pushes back up, reclaiming this area. So yeah, I would consider this trend still very healthy. Is there anything else that we can see about this? Let's pull it out. So interestingly, the point of control, which was previously here, has now shifted up. that is the next kind of indicator of a bull market is when you have that consolidation, a pullback to the consolidation, a discovery higher, and then you also want to see a continuous stepping up of the point of control, right? That point of control is what we kind of consider fair value for whatever range you're looking at. So if it is a bull market and that bull market's healthy, we want to see that point of control continuously stepping higher and higher and higher as well. So that's another thing that I wanted to kind of discuss with you guys. Let's keep going through this. So we have price kind of pulls back, tries to discover even higher. We get a retest now of our new discovery zone right here. And let's see what happens. And we get a dump down, maybe some news or something like that. Where does it go back to? That point of control of that, previous discovery range. Let's see if that holds. It does. And we get price discovering even higher. Now I'm going to kind of zip through this a little bit just to show you guys, and you can even see that now price is pulling back. Let's pull this out a little more. Price pulled back here. Where did it pull back to? This previous consolidation, and now that's used as support, and the trend kind of continues. So the next thing I want to show you guys, I'm just going to kind of delete this, and we can use this long-term volume profile over here on the left. That's all of the volume of this entire bull market. So no different in how you think about it. It's the same exact thing. But I do want to show you guys one more thing now. So as we were kind of discussing before, there's these individual peaks. For example, this one, there's this one, and those are the ones that you're using to see those pullbacks to, and then eventually discovery higher. Now there's kind of also, while there's a distinction between these peaks, these are like individual trading zones and areas of heavy liquidity. You can also kind of look at larger areas as well. So you can see that there's these things that I like to call low volume node gaps. So right here, as well as right here. So these also act as larger barriers for price, or ranges, so to say. So while these are individual areas of trading, these larger low volume node gaps separate these larger areas. So for example, this area can kind of be considered as a unit of area. This area down here can be considered a unit of area. And up here we have now a new low volume node gap and then a new discovery price range up here. And these low volume node gaps in a bull market tend to be long-term demand zones, right? Because there's a huge lack of volume there. There's going to be, kind of a difficult time for price to actually crack down through that in a bull market, because it's consistently discovering higher. That's the larger the low volume node gap is the harder price is going to be to actually break through it and return down lower to an area of previous liquidity. So if you see these new low volume node gaps, these tend to be pretty good support zones, long-term demand. So let's go ahead and kind of just keep rolling it out. I want to make sure we get through this video in a timely manner. So we have now our new area above. Price comes back down to that low volume node gap, supports it, and we have price continuously pushing higher, right? Let's look at just this area. So we have price, this is our point of control, and you can kind of think about it as like a stair step, right? So the first place that it's going to come and pull back to is right there, and it can support there. If that breaks, we're looking at this next little volume area right here. If that breaks right here, and then eventually our long-term demand zone in that low volume node gap. So let's just see kind of what happens. And then once I get through this one, we're going to go ahead and look at the market as a whole to see if we can see when um, we can actually determine a bear market. So price pulls back to that low volume node gap. Again, it is used as support. again, and up here we kind of get reclaim this range up here, and then pulls back down to this line, which is again our long-term point of control. Using it as support right now, and then discovers higher. So this is another area right here where now like you get a huge lack in volume, so it's kind of hard to see where the low volume node gap is here. You do need some time to kind of have it develop, so to say, but you can say that this is the definite division between this new area and this previous area right here. So we have already a new low volume node gap, but it's really when price is ready to move higher is when it's retesting that previous point of control, and then you should see a discovery higher out of there. So let's go ahead and we get price actually breaks through it, and then what does it do? It retests that point of control of this whole area and then immediately shoots back up, right? There's a little bit of a lack of buyers here. Price moved very quickly, and if it does come down here, this is the first place it's going to support. And then if it does break down and it even retests it right here, where should you be looking? The point of control of this entire zone right here for there to be highly likely buyers in that previous liquidity zone. So let's go ahead and I'm going to actually zoom out of the market right now. And it even actually pulled all the way back to this low volume node gap right here. Of course, we see that it does break up through it eventually. And at this point, I actually thought potentially there was going to be the start of a small bear market. We did end up ripping right through that, but another thing I like to look at is just general market structure. We made a lower high right here, right? But it's really just whether the market can push back up through and potentially maybe even reject the point of control up here and then come back down. Then it would kind of be a little bit more confirmed, but you can see what we did was we consolidated here and we got that nice test of the point of control of that, and then I was like, okay, maybe we're still ready to go a little bit higher here. So now I'm going to go ahead and zoom out of the entire replay that we've been doing. That's basically what I wanted to show you guys, because a bear market, there's no different. It's just the exact opposite. So first, what I want to do is I want to go ahead and kind of discuss how do we, consider a potential market top. So there's no, not all bear markets look exactly the same, but they do have some things similar in common. So what we have is first is the inability to break new highs. So, ooh, sorry, didn't mean to yell. To break new highs. Number two, we have it's potentially a top sell pressure zone. And I'll show you how to look at that in a second, but it's a technique that I like to use called a delta profile. And then three, what we have is a shift in market structure. And then four, which is the nail in the coffin, we have a discovery lower and fail of a long-term point of control. So that's kind of the general criteria that I have to, kind of consider if a bear market is starting. So let's look at these in, kind of sequence right here, right? Inability to break new highs. We've made our high up here, right here. We pulled back. We came back, tried to test it. We failed again. We pushed back up to that area, and right here you can kind of say, okay, if it fails here, then I'm probably going to start considering it, right? So this is like a, one, two, three, four, five times inability to hold new highs above this level. So that's already a no bueno right there. Oops, sorry about that. That's already a no bueno right there. Now let's look at number two. So a potential top sell pressure zone. So what I like to look at this is I do use what's called a delta profile, and I have these scripts and you know, indicators available to you guys in my Discord. If you guys want to go ahead and hop in there, it's free. This is what it would look like here. So let's go ahead and bring it back, maybe that many bars. So maybe a little bit less than that. Okay, so right, blue just means buy pressure, red just means sell pressure. And in long term, I'm just looking at large areas. So right here, this is kind of a heavy area of sell pressure. And right, what is that? Like, what is the market doing actually, right? So the market, if you guys don't know, there's these guys called the market makers, and their job is solely to provide liquidity. But what they're doing is running campaigns of buying a lot of shares down here, moving the price up, providing liquidity on the way up and down. That's right. That's why we have those pullbacks to those heavy liquid zones. They need to fill those orders, and then eventually, when their pockets are super full, you know, generally it ties into some kind of long-term, you know, geopolitical or economic factors. But it's really whenever they're ready to sell their position, they will offload it for a number of weeks to months, and then they will push the price back down, back to their long-term demand zone where they're trying to load for the next campaign back higher, right? So you have to look at these kind of indications. Is the market maker buying or selling? Is it moving up or is it moving down? So when you see these long-term consolidations like this, prices really struggling to break new highs, it could be a good indication that the market maker has started a selling campaign. And what that looks like is exactly what I'm showing you right now. Inability to break new highs. A generally this doesn't happen to, it doesn't always have to have a major sell delta zone, right? Because when they're selling, other people are buying. But if there is, that is even more indication of it. So if we go ahead and mark that out, then this is kind of the area where I think potentially the market maker is selling. We go ahead and see now, is there a shift in the market structure, right? If it's going to be a bull market continuing, we want to see price, you know, come up, just try to get this, potentially come back and test this point of control, and then move higher and create maybe a new low volume node gap above. And if it's going to be a bear market, we want to see, right, it's going to keep rejecting here until eventually we have a shift in market structure. So price comes up here, it kind of gets to that zone a little bit, and there may even be like a rejection of a point of control over here. Kind of, it doesn't fully get there. But when you see this, this is, you know, bin selling going on here. This kind of is it's the good indicator that's saying, hey, we're probably going to break down further because now we have a lower high. We know potentially the market maker has been selling up here. What happens? I'm going to go ahead and hide that for you guys. So where is our major low volume node gaps? Well, there's a, it's kind of this whole area is kind of our major low volume node gap, but significantly is this one right here. So I'm just going to mark that one off right there. Now, what happens right after this, right? We have a move down, it struggles to get back up and potentially rejects this day's point of control. And then we have a insane gap down. This is our first time the market has come below this low volume node gap. Let's make that just a different color. So this is our first day it comes down below that. We have price come and push back up. It comes back down and then fully breaks down below this low volume node gap. This is our major discovery lower right here. Now, what is the nail in the coffin? Number 4, discovery lower and fail of a long-term point of control. Just like I showed you on a short time scale, if you have a consolidation of any duration and then price breaks down and then retests that point of control, right? There's a discovery lower, a retest of that point of control, and a fail. Likely the market is moving down out of there. So where is our point of control of this entire region up here, this whole volume area? It's this level right here, roughly 683.25. So we see that discovery lower, price is seeing if there's buyers down here, because there's not a lot of buyers left up here, right? Buyers do press back up. Where do they press to? Exactly that, sorry about that, exactly that long-term point of control right here. So on this day, when I saw this huge rejection here from that long-term point of control, that was to me, I shouted out in the Discord, like, we are going to move lower out of this immediately. Price comes down, struggles to hold this low volume node. We get a major break below, and then it retests that low volume node gap from below. And then look at the fail that we've had. Sorry about that. Keep on the drawing tool there. And then out of there, look at the kind of rip that we had down. So if you see this kind of progression, that is it. That is the determination of a bear market, right? And then it's pretty much the same thing on the way down. So bear markets do tend to happen quicker than bull markets just because of the psychology of trading, right? People are kind of more cautious to get in and build for higher highs versus the panic that you feel to get out of the market when you see lower lows, lower highs. So it does tend to happen quicker, but you always want to see this progression of this failure of the long-term point of control, price now discovering lower, struggles to get back into this high consolidation area up here, and then fails further. So on the bear market, you're looking for fails of those long-term points of control, discovery lower, and then rejection to price to get back into that higher area. And that's really pretty much it. That's your indication. I mean, if you were to swing short right here, right, and then you can literally just make tons of money just looking at for these areas of pullback. So pullback here, you see this candle right here on this low volume node gap, you swing short again. And you can target, this point of control right here. That's our next point of control down, right? This whole volume area, the heaviest volume area is right here. Let's just kind of put a box on that, make it white so you guys know it's a point of control. And then when price breaks down, look at where it hits. It fails that heavy volume zone, that point of control. Where does it go down to? This next heavy liquidity zone is where there's potential buyers. That's where it supports, fails it there yet again, makes a lower high, and then we have this massive rip down. So that's what you guys should be looking for at any point in the market, deciding what kind of cycle you're in, what point that the market's in. Let's go ahead now and look at a shorter chart to see if we can see any kind of uh, definitive like places we could take trades. But that's pretty much everything that I wanted to show you guys. I don't want to make this video too crazy long, but what I am doing, I usually pull up a 30-minute chart to kind of do my pre-market analysis. And on that same kind of theory, you can look at it from day to day, right? So these lines are just low volume node areas that can be used for support and resistance. This is our huge low volume node gap. And then I'm going to go ahead and pull up the volume profile of just the current, the session volume profile. So this is the volume profile for each day. And this line right here is each the point of control of those sessions. So if you guys definitely go check out my video about mastering point of control retests, because this is a huge part of my analysis. So what you're looking for is you're looking for a area of in an individual session of heavy liquidity, which are these little peaks right here. So for example, this day you had price rip down and then this massive volume area down here. What happens the next day in pre-market? It rejects that area and then moves lower. So What you want to see is price trying to get back to where it was previously and then failing. And that's your indication that, okay, if we can't get back to this volume area, likely we're going to move lower. So it rejects there, rejects there. It can't get above this. This is going to be a pretty heavy zone, and it also happens to be our long-term point of control, right? So we have price kind of gapped up on some news, but where does it get to? This heavy liquidity zone, our point of control, where sellers are still selling. So that's kind of that long-term view. But that's pretty much it right here, right? It moves down, can't get back up into the previous day, then moves down, this day was very, very aggressive. So in pre-market here, it can't get there, then pushes back up and kind of fails even further. That is pretty much what I wanted to show you guys. Definitely eventually you can have some kind of bullish relaxation. Like for example, right here, we had that rejection of our long-term point of control. That's where I said, hey, this is going to be kind of ugly. This day's point of control is right here in this volume peak. The next day, price tests this low volume node gap, moves up, rejects at that point of control, and then fails down below our low volume node gap, retests it, and moves down. And you can kind of look for these areas of, hey, where potentially buyers going to come in. It's usually areas of previous heavy liquidity. For example, this session where we moved up, that's going to be a target for bears on the way down. You can use those, session volume profiles as targets as well. And in this case, you see price pulled back to our long-term long-term point of control right here. That's that dashed line, this heavy peak right here. So that when it gets to one of those next areas that was previously a heavy liquidity before, then I say, okay, maybe we have some kind of pullback, especially if technicals are kind of really oversold. And then you do see a push up from there. Where am I looking for? Well, I'm looking for that next rejection of the low volume node gap here. It makes it there, rejects it in pre-market, and we get our next run down through that. So use the point of controls long term as well as the low volume node gaps to kind of gauge entries for a bear market. And it's the same thing for a bull market, just the other way. And then kind of deciding if we're currently on the downtrend by seeing if we're failing those previous days point of controls. And if we get below the next long-term point of control, we're looking for price to pull back to it and then fail to see if we can go further down. That is it. Just be careful in a bear market because sometimes the market can be irrational. Sometimes it may feel like it's going to have a run up and then we get something like this where things are very oversold, but it still keeps just crashing down. So you really have to gauge, are we back in the previous area, previous days volume area, or are we still moving down? If it fails out of the previous day's area, likely you're going to still have another red day until you get to the next area of heavy volume below. So that's what I wanted to show you guys. Again, I do have a free Discord where I give you guys a pre-market plan. We talk, we discuss volume, analysis. We have a great, great, great community. I'd love to see you guys in there. That's all for me for now. As always, guys, happy trading.